Good afternoon, everyone. We are just going to wait a few minutes. You have joined us for the Getting Ready to File Your 2020 Taxes webinar. Today we had several register, so we're just going to wait about 30 seconds or so to give those folks a chance to join the meeting, and then we'll get started. While we are waiting, just a reminder that we will be taking questions during our webinar today. And please make sure you use the Q&A box to enter your questions and not the chat. So again, use Q&A if you have any questions. And again, welcome. We're just going to wait a few more minutes as we wait for people to join the webinar this afternoon.
I take it my volume's okay, right, Paula?
Yes.
Okay, good.
All right, very good. We'll go ahead and get started. We may have a few joining as we move forward. So welcome everyone to Getting Ready to File Your 2020 Taxes. My name is Paula Whittekind. I'm going to be your host today. So our guest speaker today is Lisa Novak. Lisa is the Senior Stakeholder Liaison from the IRS Communications and Liaison Division. And so she's going to be in the hot seat today, taking us through all the questions you have about taxes, whether it's personal and business. Again, my name is Paula Whittekind. I'm the CARES Program Supervisor here with the Maricopa Small Business Development Center. And again, just a quick reminder as we start forward, please use the Q&A to enter any questions that you do have. And Lisa, do you have a preference today? Do you want to sprinkle questions in the middle, or should we wait until the end just as a guideline for everyone?
Let's wait until the end if we could.
Okay. All right. So, but feel free to put your questions in Q&A and we'll get to them at the end of the presentation. So very quickly, before I turn things over to Lisa, some of you may not be familiar with the Maricopa Small Business Development Center. We provide no-fee counseling to small businesses, and we're part of a national network, but we're part of also the America's SBDC Arizona network. And you'll find small business development centers scattered across the country in every state and multiple locations in every state. Here in Arizona, we have 10 SBDC centers. So if you're joining us outside of Maricopa County, just know that there is likely an SBDC center and counselors near you. But we provide no-fee counseling to our small businesses. Whether I have a business idea and don't know what to do next, maybe you've been in business a year or two and starting to scale up, or maybe you're a very established business owner. We help all industries at all stages of small business ownership. We have about 17 counselors here in Maricopa County, and we are able to provide our no-fee counseling and training such as this and additional resources, which I'll share with you later in our presentation, because we are funded by the Small Business Administration at the federal level, here locally by Maricopa Community Colleges, and then also through a partnership through the Arizona Commerce Authority. And just a quick snapshot view of the type of things we help our small business clients with. Of course, with all of the COVID funding going on, we're helping many of our clients just navigate the disaster loan assistance, especially the new programs now coming for 2021. We help our clients get access to capital, help them get lender ready. We do financial review, resiliency assessment, marketing assessment and planning. Perhaps you're thinking about buying or selling a business or exit strategies. We have experts in manufacturing, technology commercialization, export and international trade. And just think of any area of business development. Our counselors have expertise. We're certified counselors. Many of us have been past business owners ourselves. And so all areas of small business development we can assist with. And with that, at the very end of the presentation, I'll talk to you more about how you can request our no-fee counseling services. But right now, I do want to turn it over to Lisa Novak. So Lisa, I will stop sharing my screen and you can go ahead and share your presentation deck.
Okay, great. Thank you, Paula. Let's see if I can get this loaded here. Okay. So good afternoon, everyone. On behalf of Internal Revenue Service, I want to thank the Maricopa SBDC for inviting me to speak with you today. It's kind of an important topic, but I hope everyone has been staying safe and healthy out there and that you're all ready to file your tax return if you have not already. Oops, sorry about that. So, you know, everybody's seen a lot of changes this year, I'm sure, and IRS especially. We definitely had some tax changes. Most of them were due to COVID, but I wanted to share some of this information with you and some of the resources with you so that you are ready to file and so you know what some of those changes were that might affect your tax return. So I have just a hodgepodge of information to share with you today. So I'm going to go ahead and get started with the meat of the presentation. Okay, so you all might have already heard, well, maybe you heard the phrase, if you don't like the weather, stick around for 15 minutes. I think they say this in several different cities or states, not necessarily here in Arizona, but that's kind of what the filing season feels like to us this year. We don't typically get a lot of changes to the tax laws after the filing season starts, but that's what happened this year. So we kind of have to roll with the punches here. It does affect a number of different issues for filing. And so that's one of the things that I wanted to bring you this year. You know, filing season did kick off a little late this year. It was a delayed start due to several of those tax law changes that happened in late December. So we didn't actually start accepting returns until February 12th this year. So that was about 2 to 3 weeks delay than normal. Then a few weeks after that, the IRS and Treasury announced that they were extending the due date, the filing date and the payment deadline for individuals till May 17th of this year. So what that means is the deadline for both filing the tax return and paying any additional tax due as a result, those are not due until May 17th. However, this relief does not apply to estimated tax payments. Those are due April 15th of this year still. So this would be your first estimated tax payment for the quarter for 2021. So it's still due on April 15th. So keep that in mind. Some other guidance that we recently issued was that individuals do have until May 17th also to meet certain deadlines that would normally fall on April 15th. So things like making an IRA contribution and filing certain claims for refund. Also, just I think it was today, I got some guidance from the Arizona Department of Revenue, and they have also extended the due date for the state return to May 17th. Again, their first quarter estimated tax payments are still due April 15th as well. So that was some news fresh off the presses. Okay, so I've talked about some of these tax law changes. The American Rescue Plan Act affects a number of different provisions when it comes to filing your tax return, not only for the current 2020 year that we're filing now in 2021, but for future years as well. So this slide does show just a couple of those changes, and the IRS is still working on a plan to implement all of the changes as part of this legislation. So just stand by. We will be getting more and more information out as we get a chance to go through the American Rescue Plan Act. I'm sure you all already know that we're now sending the 2021 economic impact payments. We're calling that EIP3 because of course we've had 2 payments in the past. So for those of you who may be expecting a payment and may not have gotten it yet, you can use what's called the Get My Payment tool on IRS.gov, and it'll give you an idea of, you know, if we've sent the check, whether we mailed it or whether we direct deposited for you or anything along those lines. So you can get that tool. So if you know of anybody that might still be looking for their payment, just send them in that direction. Okay, so another new provision, and so this might already affect you. If you've already filed your tax return for 2020, there's a new provision that makes the first $10,200 of unemployment compensation non-taxable. If you've got a modified adjusted gross income under $150,000. So, I know that there's people that might have already filed their return or maybe have been waiting to file it. So the IRS has actually worked with the software companies to get them to update the software for those returns that have not yet been filed. And then IRS also developed a worksheet for folks who prepare their returns by hand, although we don't really recommend that. We really push for you to e-file your return. Now, if you have filed a return that included unemployment compensation, the IRS did just recently issue some guidance that says that we are going to take steps to automatically refund the money this spring and this summer to people who have already filed their return. If they've reported that unemployment compensation, the IRS will go in and make those adjustments. So look for that coming up, but please, please, please don't file an amended return. That'll just cause additional delays for you and some additional work for IRS. Okay, so next we're going to talk about some things that are good to know for the 2021 filing season. Last year we saw some pandemic related delays in processing returns, in processing refunds, correspondence, because we had to shut down for several weeks. So that kind of showed us, and hopefully everyone else, the benefits of using electronic means to correspond with IRS. Because we did end up with several truckloads of correspondence that we had to go through once we were able to open up. So one of the things that we want to remind people is the fastest way to get your tax refund is by filing electronically and choosing direct deposit. Direct deposit's free, it's simple, it's safe, and it's actually very secure. And you can even split your refund into 3 different accounts, or up to 3 different accounts if you would like to do that. So there's probably about 80% of taxpayers do elect direct deposit. We do use the same system that's used by other federal government agencies, like Social Security and veterans. So it's, a tried and true method, I guess I'd say. The other good thing about it is it does avoid the possibility that a refund check could be lost or stolen or returned to the IRS as undeliverable. And it really actually saves some money. It actually costs more than $1 for every paper return issued, but only a dime for each direct deposit. So it is quite the money saver there. The other thing that we wanted to remind people about is our free file program. And the IRS free file program is actually a partnership along with some of the tax preparation and filing software industry leaders who actually provide their brand name products for free. There's actually 2 different ways you can do this. The first, it's based on your income. So if your adjusted gross income is $72,000 or less, you could qualify to use our IRS free file partner software. So you can go to IRS.gov and search for free file. It is shown on our homepage. If your income is higher than $72,000 and you do have knowledge of what you're doing and how to prepare a return, you can use our free file fillable forms. So you can fill those out online and then you can file for free. So it's not like using a tax software. You just actually need to know how to prepare your return. But those are 2 different options for you. Another thing that we found this year is many people might have experienced certain financial situations for the first time in their lives. So they might not realize that there's certain tax related implications to some of these things that are happening, especially related to COVID-19. So You know, certain events like job loss or debt forgiveness or even tapping into a retirement fund could cause some tax consequences. Also, if you think about it, the information on the 2020 return might look a lot different than it did on your 19 return. So we do have a page on IRS.gov called the What Ifs for Struggling Taxpayers. And there's a bunch of different scenarios there that show that there might be a tax impact for families. So whether it's job related, debt related, you know, if you had a debt forgiven, tax related, maybe you can't pay your taxes this year. So there's all sorts of different scenarios there that hopefully will help people. Now, some of the legislation that just passed might change some of those things on that page too. So hopefully that'll get updated as well. But understanding how last year's changes affected individuals and families and their tax return is really important. I did provide a link on the bottom of the slide to a fact sheet that IRS developed to explain what taxpayers need to know about filing a complete and accurate return, about claiming any credits and deductions that they might be eligible for, and also getting your refund timely, meeting tax responsibilities and things like that. So there's a lot of different references there for you. Okay, so the economic impact payments, two of them were issued kind of in 2020. They spilled over into 2021 for that second payment. However, you might be hearing information about the recovery rebate credit. It's kind of the same thing as the economic impact payment. So most people that are eligible for the recovery rebate credit have already received that credit in those two economic impact payments. Okay, so hopefully that is kind of clear. It might be a little bit confusing, but basically what the law said is, here we're giving a recovery rebate credit, but please send it out early. And so that's what the economic impact payment part of it was. So if you did receive both of those payments, the full amount of them, you won't have to claim the recovery rebate credit. You won't have to really address it. I think some of the software does ask you like how much you received or if you received it, but there won't be anything recovery rebate related on your return. Now, if you were eligible and didn't receive either of the payments, or maybe we didn't issue the amount that you were expecting or that you are eligible for, that's where you're going to claim the missing amount, is under the recovery rebate credit when you file your 2020 return. And so you are required to file the return in order to get that recovery rebate credit. It's not going to be automatic anymore. We are done sending the payments for the EIP1 and the EIP2. You'll also need to know the amount of what you did receive. And so let me give you an example of somebody who might not have received the full amount. So maybe you had a child in 2020, but IRS was basing your economic impact payments on the 2019 or the 2018 return, whichever was filed. And at that point, you wouldn't have had that child listed on your return because that child wasn't born until 2020. So therefore, you know, if you were married filing joint, you would have gotten the $2,400 for the first payment, but you wouldn't have gotten that extra, I think it was $600 at that time for the dependent. So that's when this recovery rebate credit on your 2020 return is going to kick in, or if for whatever reason you didn't get any of the payments. So that's what you're going to need to know. Now, the bottom of the slide does show a link to information about the recovery rebate credit. We've got tons of frequently asked questions and answers on there. So if you have that question, somebody else probably already has, so you can look in there for the FAQs on this topic. Whoops. Okay. So again, this is where you're going to claim the first and second payments. Or you can use that recovery rebate credit worksheet if you are doing your own return by hand. And again, don't recommend it. Now, how do you know how much you received? Well, you should have received for the first payment, you should have received a notice 1444. That should have come out within a couple of weeks after the payment. After the second payment was issued, there was quite a delay between the time you received the payment and the time you got the notice 1444B, which told you how much you received and how you received it. I think a couple of weeks ago, I had friends sending me these notices saying, why did I get this from IRS? And so it was just so that you had a record of the amount of the payment that you actually did receive. Okay. Now, let's say you got those notices and either you didn't know what they were or you lost them, they didn't end up with your tax records. If you need to find out how much of the payments you did receive, you can go to IRS.gov/account, and so you can view your tax account records online. Now, there is a little bit of a hurdle that you have to get through. You have to pass the identity verification through the Secure Access program, because we don't want to just give your information out to anybody. So you will need to register for some of the self-help tools that we have. Once you register, once you get through the Secure Access process, pretty much most of the programs that we have that you can access, you won't need to re-register for them. So if you go in and set up an account, then you can access that information on your economic impact payment. Another thing you can do, if you're not successful in setting that up, is you can order a transcript of your account. You can actually do that by mail. Go on to IRS.gov, request a transcript by mail, and it takes maybe about 5 to 10 days to get that transcript. But there are other options for you if you can't get that information.
Lisa, if I could jump in real quick, just
Yes.
a quick reminder to everyone, please put any questions that you have in the Q&A, and then Lisa will take your questions at the end of the presentation. So keep those good questions coming. And just a quick note that this is being recorded today, and the recording will be made available to you on the Maricopa SBDC website. So it's a lot of great information, but not to worry, you'll have access to the recording to go back through if you need to.
Okay, thanks, Paula. All right, so the earned income tax credit. This is maybe one of those situations that somebody has never qualified for earned income tax credit before because their income was too high. But this year, with 2020 being a totally strange year, you might qualify for earned income tax credit this year. This is actually one of the government's largest refundable federal income tax credits. This is for low to moderate income workers. So if an individual does qualify, they can use the credit to reduce their taxes owed, or maybe just increase their tax refund. For example, the EITC is worth as much as $6,660 for a family with 3 or more children, or it's even up to $538 for taxpayers who don't have a qualifying child. So this is going to be one of those things that you maybe want to look for to see if you're eligible. Actually, 4 out of 5 eligible taxpayers do receive the EITC, although about a third of those who qualify for it are qualifying for the first time this year, because of any changes in like marital status or parental status or financial status or something along those lines. Now, the new rule for this year, or for the 2020 returns, is if your income was higher in 2019 than in 2020, it may be more beneficial for you to base the earned income tax credit on your 2019 income. So you do have the option to do that. And if you're electronic filing your return, the software should walk you through those steps to do that. Same with the additional child tax credit. You have the option for that as well. Now, the slide does note that the American Rescue Plan will make changes for the year 2021, which we're currently in, and 2022 filing season. So you want to make sure there's going to be more information coming in the coming weeks to months about some of these other changes as part of that American Rescue Plan. So, keep an eye peeled for additional information on some of those topics. Okay, this slide was all prepared before filing season started, but this is just to show you that if you do claim the earned income tax credit or the additional child tax credit, there's usually a delay in processing that return and turning it around quickly. If you file a return before a certain date in March, we do delay those refunds that have those kinds of credits on it until March. And that just gives the IRS time to make sure that there's no fraud, that people aren't filing, fraudulent returns to get these big refunds. So it just gives a little bit more security to these programs. Okay. Now, just like everything else, the scammers are out there working hard and they're coming up with new ideas and different things to do. Well, this year they sought to exploit the situation from the pandemic, and they were filing for fraudulent unemployment benefits using stolen identities. So you might have already heard about this in the news, or maybe it did impact you. I know I got an unemployment card in the mail, and so I had to contact them and say, hey, I didn't file for unemployment. So it could have happened to anybody. Now, you might, if it happened to you, or maybe you didn't even know it, you might have gotten a Form 1099-G for 2020 unemployment compensation from the state. So if you did not receive unemployment compensation, but you did get one of those forms, you want to make sure that you contact the state to report the fraud. You want to ask them to issue you a corrected Form 1099-G. Now, of course, they're going to need some time to investigate the fraud complaint and make any corrections. So it's probably not going to come to you very quickly. But in the meantime, even if you don't have that form, you can actually still file an accurate tax return. And you would only report the income you receive. So you would not have to report that unemployment compensation not receive. So keep in mind. The other thing you might want to consider is going to the FTC website, the Federal Trade Commission, and looking at their recommendations for identity theft and see if there's other things that you should be doing. But it should not impact your tax return just because somebody filed for unemployment compensation in your name. Okay, so another thing that people found themselves doing this year was maybe some folks found it necessary to take some early distributions from their 401k plans to just meet their needs throughout the year, especially if business was down or if somebody lost a job or something along those lines. Now, the CARES Act actually said that those distributions up to $100,000 are not subject to the 10% additional tax that would otherwise apply to any distribution if you were if you hadn't yet reached age 59 and a half. So that was a big relief for those folks who could take the withdrawal from those accounts. Now, with those kinds of distributions, those are taxable on top of having to pay that penalty generally. So now you don't have to pay that penalty. You're still going to have to pay tax on it. So what the CARES Act did was they said, well, you can include the income in 3 equal installments over a 3-year period of time. Or you also have 3 years to repay that amount to the account where you withdrew it. And so if you included the income over, the 3-year period, but then eventually you paid that back, you can kind of undo the tax consequences of the distribution by filing an amended return to get those back. So that's one thing to consider. So you're going to have to pay tax, but you could expand the time that you pay the tax on. You can include it in 1 year, you can include it over a 3-year period. You don't have to pay the 10% additional tax. You're not subject to mandatory withholding on it, and it can be repaid to your IRA or your workplace plan or something along those lines over that 3-year period, or within 3 years, I guess to say. So you have options when it comes to that. All right, another thing that came about in, oops, went too far. For 2020, you know, a lot of people now, based on the tax law changes in prior years, a lot more people are just taking the standard deduction rather than itemizing. So when you do that, you really lose the ability to deduct charitable contributions. So the law now says that even if you are taking the standard deduction and you're not itemizing, you can take cash donations of up to $300 that were made through 2020 without having to itemize when you file your return. Of course, you want to make sure that it is a tax exempt organization that you're giving to. But the software, again, is going to prompt you for any information about that. Another thing that happened this year was, you know, we extended deadline to file last year to July 15th. However, any refunds that were issued between April 15th and beyond, actually you received some interest income on it. And that might have thrown some people too. I had people calling me saying, why did I get this separate amount from IRS? So IRS did pay interest on those refunds if they were filed after April 15th. But just a reminder that these refunds or the interest payments are taxable. And so they would have to be included on your 2020 return. If you received more than $10 of interest from IRS, they would have issued you a Form 1099 INT. So you'll want to report that as well. Okay, so let's take a look at what's new for filing season 2021, which is right what we're in right now. And I'm sorry for the heavy finger here. And I think I went too far. Nope, I didn't. Okay. So one of the things that's new this year is our commissioner is really, he's made it a priority for us to do more to help taxpayers in their most comfortable language. So there are a lot of different options right now. The IRS is doing a lot of different things to reach out to people, to translate material into different languages and things like that. So we want you to be able to just take a look at the information. There is a new languages page that has some basic tax information translated into 20 different languages. You know, we've done things like when we were trying to get the message out about the economic impact payments initially, we actually tapped into some of our partners who helped us translate some of our material into 35 different languages. So it's a huge effort, and we are trying to reach out to some broader audiences and issue things in multiple languages. So if you know anybody that prefers their information in another language, please share this information with them. We do have certain high volume web pages that have been translated into the languages shown on the slide there. It's Spanish, Chinese, both simplified and traditional, Korean, Russian, Vietnamese, and Haitian Creole. So a lot of our information is already on IRS.gov in those languages. You can see the links to those available translations on the right side of the web pages, just below the title. So you can switch it into those languages if you want to. And we also use multiple languages on social media. So that includes Twitter and Instagram and Facebook. So you can always take a look for that information as well. Another option that we have, if you're calling into our phone lines and you prefer to speak in your native language, we do have something called the over the phone interpreter service. And if you let them know they can get this going with the over the phone interpreter service and have them assist you. We also now have a separate toll-free line for non-English and non-Spanish speaking taxpayers. So we do have, if somebody wants assistance in Spanish, they can call the regular 829-1040 line. But for other languages, there is that separate line showing on the slide. Okay. The other thing we're doing now for the first time this year is we're issuing the forms 1040 and the form 1040 SR in Spanish. So that might help people prepare their return a little bit easier. And then we also have an option when you file your return, there's a new schedule LEP, which is a request for change in language preference. So this is going to allow you to tell the IRS that you would prefer information come to you in your preferred language. And so there's options for up to 20 languages besides English. So that's another priority that we're working on this year as well. And then this year, you do have the option to get an identity protection PIN. And so let me give you a little bit of an idea about what the IP pins are about. You know, identity theft is impacting everything everywhere nowadays. There's actually even something called tax-related identity theft. And so this is where someone would get a hold of your tax information and maybe they would file a fraudulent return using your identity to get that fraudulent refund. This is going to cause problems when you go to file your return, because then the IRS is going to have to work to figure out who is the real taxpayer, you know, who's filing the correct return, and it gets kind of messy in there and it can take a little while to unravel everything. So one way to avoid falling victim to this is to use what's called an IP PIN, or an identity protection PIN. So this year, for the first time, you can opt into this. You can use the IP PIN tool on IRS.gov/IP PIN. This is actually just a 6-digit number that you are going to file with your return once you get that IP PIN. So it's going to add that extra layer of security in addition to using your social security number. And it's under the premise that, okay, if somebody steals your social security number or has that information, but you also have an IP PIN that needs to be included when you file a return, then that bad guy is not going to be able to file a return with your social security number because you have an IP PIN. Now, this is another one of those tools that you have to pass that rigorous identity verification process. So keep that in mind too. But if you want to check it out, you can go to IRS.gov/IP PIN. Okay, so here's just a few filing season reminders for you. And I already mentioned that you need to file your return by May 17th. And this is even if you owe money, but you can't pay. We really do encourage you to get that return filed, because you would have separate penalties. You would have a failure to file penalty, and then you'd have a failure to pay penalty. So might as well get that return filed. We encourage you to pay as much as you possibly can to avoid additional interest and penalties on those amounts. But just be aware that the IRS does offer payment options. You can check all those out at IRS.gov/payments. And then also, if you need time to file beyond that May 17th deadline, you do have the option to file for an extension to October. But if you file an extension to file your return, it's not an extension of time to pay. So you need to make sure that you've got all of your potential tax paid by the due date, by May 17th. It's not always easy to do that, admittedly, but you just want to make sure that you can pay in as much as you possibly can. We've already talked about the fastest way to get your refund is filing electronically and using direct deposit. Most refunds are sent in less than 21 days. Now, there are some that might require further review. I kind of gave you an example of that earlier, and some might take longer. But we do encourage electronic filing, direct deposit. And then the other thing we do want to caution people about is we keep saying how quick you get your refund, but we don't want people to rely on that 21-day date. So if I file my return today, I'm going to have that money in 21 days. So I'm going to go out and charge this and I can pay it off then. Or, I can pay this bill now because I know that money will be in my account. And you cannot rely on that 100%. So we really do discourage people from counting on that and making any advanced purchases or anything like that. Just because, if somebody, you have no idea that somebody might have filed a return using your information already. There might be an error on your return when you file it, or we just might have to double check on some things, and that would delay the processing of it. So, if we need more information, we would contact you, and that would delay a refund as well. So just keep that in mind if you are expecting a refund. We also do have a tool called Where's My Refund? So if you're looking for when you can be expecting your refund, it's generally going to be available on that tool within about 24 hours after the IRS acknowledges the receipt of your electronically filed return. So they'll just update and say, okay, we've received your return, and then they'll update it to say we're processing your return, and then they'll update it to say you can expect your refund to go out, on XYZ date. So that's a nice little tool. That can also be accessed through our IRS.gov app, which, yes, we are in the 21st century, and we do have an app that you can use. You want to make sure that you are checking the IRS website for any additional information. It's probably easier to check these than calling IRS, so keep that in mind. We are very busy, not only in filing season, but we're still kind of trying to work through all the pandemic stuff that we had to deal with. So just please keep that in mind, because it'll cut down on some frustration for you. We do have tons of information on IRS.gov though, so it's really kind of the quickest way, whether you can get the information through one of those tools we talked about, or going to the frequently asked questions on some of the things we talked about. That might be something to consider as well. This slide actually shows some of the tools that you can use to get some of your questions answered. So we've got an interactive tax assistant tool. Where's My Refund? Publication 17 is actually a little booklet that covers the general rules for filing a federal income tax return. And then the online account, like we talked about, that is another option for you as well. I hope I'm not making you all dizzy when I switch the slide over. I'm very sorry about that. The other thing is we have some alternative tax products. So if you need something in Braille or something along those lines, we do have that information available that way as well. Okay, and I know that there was some interest in some of the business updates for expenses and credits and things like that. So I'm just going to cover these very briefly. I would probably need a few hours to go into all the technical aspects of this information, but just to make sure that you are aware of the new employer tax credits that came about as a part of the CARES Act. And some of it has been extended as we've gone through, and with the American Rescue Plan Act and things like that. So, this was mainly because a lot of the businesses that were severely impacted by COVID-19, it gives them the option to qualify for some of these credits. And so there's the credit for sick and family leave, and then there's also the employee retention credit. So to start out with, the credit for sick and family leave. So if you had an employee who was unable to work because either they were quarantined or they had symptoms and they were seeking a diagnosis, they would be entitled to paid sick leave for up to 10 days or 80 hours. at their regular rate of pay. So this would be up to like $511 per day, but since it's limited to 10 days, the maximum amount would be $5,110. Now, on the other hand, if they were just caring for someone with coronavirus, they maybe their spouse had coronavirus or their child or someone along those lines, they would be entitled to paid sick leave for up to 2 weeks or 80 hours, but it would be at 2/3 of their regular rate of pay. So that would be up to $200 per day, no more than $2,000 in total. Now, the third aspect of this is to care for children due to daycare or school closure. And so in this instance, if their child was home from school because the school was closed down or the daycare, they would be entitled to paid family and medical leave equal to 2/3 of their regular pay, but for them, it's up to 10 weeks. So the maximum amount is at $200 per day for a total of $10,000 in total. So what happens is, as the employer pays these amounts, because their people are still off work, but they're still paying them, the employers are eligible to receive a credit in the full amount of the required sick and family leave. It would also include any related health plan expenses and the employer's share of Medicare tax on the leave. And this would be for the period of April 1st of 2020 through March 31st of 2021. Now, the CARES Act originally expired on December 31st of 2021, but it has since expanded to March 31st. So there are ways to claim this credit. You would do that when you were filing your employment taxes. And if you didn't have enough employment tax to hold back, you can apply for an advance of this credit. And then the other credit is what's called the employee retention credit. This was actually designed to make it easier for businesses that, you know, even if they were experiencing challenges because of the pandemic, they chose to keep their employees on payroll. So they continued to pay those employees. So the eligible employers can claim the employee retention credit, which is a refundable tax credit, and it was equal to 50% of up to $10,000 in qualified wages. That has since changed and it's now up to 70%. And the due dates have extended now through June 30th of 2021. Initially, it was due to expire January 1st of 2021. So an eligible employer would be a business with operations that have been partially or fully suspended due to governmental orders because of COVID, or that have a significant decline in gross receipts in comparison when you look back to 2019. So the refundable credit is going to be capped at $5,000 per employee. That has actually raised to $7,000. And it, again, applies against certain employment taxes on wages paid to all employees. Now, if you want to find out if you are eligible to claim either of these or any of these credits, you can go to the COVID-19 Business Tax Relief tool. And yeah, we do have another tool. You know, this is a tool we have for this topic. So this is going to determine if you or your business is likely to qualify for either one of the tax relief options that are available. Okay, and so one of the big questions that people probably have, the Paycheck Protection Program, or PPP, that's a big deal right now. And hopefully for those of you who were able to qualify for those, hopefully that's helped you out a lot. I know that I wanted to provide you with some resources that might be helpful for you in relation to the PPP program. IRS doesn't have a really big role in the program since it's run through SBA, but of course there are some tax questions surrounding the legislation, and there have been kind of some changes that have gone or that have come about throughout the year. So Revenue Ruling 2021-2 does kind of address some of these issues that you might be curious about. But one thing it does spell out is that if you have a forgiven debt, usually a debt forgiveness is includable in income unless there is an exception already shown in the tax code. Now with a PPP forgiven loan, that can actually be excluded from income. It is spelled out in this revenue ruling. So any amount that would have otherwise been includable in your gross receipts or in your gross income, if it's forgiven, it can now be excluded from gross income. And this is in dealing with the PPP program. We're not talking about anything else. Also, for expenses, you can still deduct the expenses that you paid with the loan proceeds. So there was some question about that early on when the program first started. That next bullet on the slide actually provides some answers to questions about how the PPP would interact with other credits, like that employee retention credit that I just talked to you about. And then some of the other resources that you might want to include or might want to review include the Department of Treasury and the Small Business Administration website. And then this isn't necessarily part of the CARES Act, but I do want to remind people that if you are looking to hire employees, you might want to look into the Work Opportunity Tax Credit if you aren't already familiar with it. This is a tax credit that's available for employers for hiring individuals from certain targeted groups. And these would be people who have consistently faced significant barriers to employment. So you would claim the credit on a Form 5884. You can find out more information on IRS.gov/WOTC for Work Opportunity Tax Credit. Just to give you an idea of what kinds of groups might be eligible, would be a qualified veteran, also an ex-felon, a vocational rehabilitation referral, a summer youth employee. So that's just an idea of the types of folks that you can look into. So keep that in mind, especially if you're looking to hire anytime soon. Okay, so now it is time for questions.
Hi, Lisa, do you want me to read these from the Q&A?
Yes, would you please?
All right. So the first question we have is, my company was registered in 2017. We are developing software and still in development stage. We have not generated even a cent, but bootstrapping our company. Do we still have to file taxes?
Okay, there's a lot going on in that question. It might be something that I want to talk to you offline about, because I have a number of questions to ask you about how you were registered, what kind of company you are, whether you're, an LLC or an S Corp or something along those lines. So there's a lot to deal with there. So if you want to send me an email when we get offline, and my email address is shown there.
Perfect. All right, great. Next question. Which software do you recommend for monthly tracking of business expenses, Xero or QuickBooks?
So I am not allowed to promote or recommend any kind of software, any kind of tax professional, nothing. So maybe SBDC might be able to give you a recommendation.
Okay. All right, and will EIP payments from this year be taxed?
Nope, the EIP payments are not taxable.
Okay. Can both married couples each obtain the information for the EIP in their own account online?
Yes, you will be able to get your own information related to your own EIP through your online account.
Okay. How do you determine if your children whom you claim on your taxes have to file their own taxes? Children are in college and has received unemployment in 2020.
So we do have several resources on IRS.gov that would give you an idea. That publication 17 that I talked about earlier, that would have some information. You can just go on IRS.gov and do a search for filing requirements. That'll give you an idea. But in general, I think you're probably are you trying to determine whether you can claim them on your return, or are you trying to determine whether they need to file a return? Because those are kind of two different things right there. But you can find that additional information on IRS.gov.
Okay, next question. Do college students or the parents that claim them on taxes have to file the taxes for the scholarships that they receive?
Yes. So if you use some software, it's gonna walk you through the questions and answers as far as the scholarships or the education expenses and things like that. It'll help you determine whether you're eligible for any of the education credits or whether the student might be eligible to claim those education credits as well.
So software, it sounds like, helps guide you through that.
Definitely.
All right.
Yeah.
All right, and last question that I have, I've already filed my 2020 taxes, but did have 3 to 4 weeks where we allowed our employees to stay home, but still paid them. Is there a way we can still claim this employee retention credit?
So yes, you should still be able to. You might need to file an amended return. I would have to do some research into how you're going to do that. So again, if you want to send me an email and spell out a little bit of the information for me, I'll do some research and I'll get back to you.
Okay, and one final question. I see we're coming to the top of the hour. Where is the best information and guidance on PPP forgiveness for this year? We weren't eligible last year.
So I would say the SBA probably has the best information there to find out about that, or you could go to the Department of Treasury website, but I have a feeling the SBA might be a little bit more clear.
And I'll add to that one that is definitely an area where the SBDC counselors can assist you if you have questions related to things such as the PPP loans and EIDL loans. So
I know
think
that's
this is
keeping you guys busy, right?
That's exactly right. Lisa, if you would stop sharing your information and perhaps we could add that contact information into the chat.
Okay, can do
and
that.
And then I will go back to my deck to close us out here today. Hopefully I'll grab the right deck here. Okay.
Oh.
All right, so to close us out, we talked briefly about the types of areas that the Small Business Development Center counselors help our small business clients with. So if you are interested in requesting counseling, it's a very simple process. You can go to our website, maricopa-sbdc.com, and click on the Request for Counseling link. It's a very simple form to fill out to request counseling. We do schedule by appointment only. But what happens is once you fill out that request, you're contacted by a lead counselor, depending on your situation. We have an initial counseling session with you where we talk about the business, learn who you are, what some of your challenges are, and figure out how we can assist you, and followed on by follow-on sessions. It really is kind of a customized one-on-one counseling experience that we have with our clients. And of course, we help you set your goals and track your goals to whether you're trying to sustain your business right now as we still navigate through COVID, or just laying those plans in for growth for your company. We are here to help with our resources. And just very quickly, in addition to one-on-one counseling, you have many tools to help you. You see here on the screen just some of those tools that are free to you as a client of the SBDC. We have our Growth Wheel 360-degree business development tool. We have access to Live Plan if you're trying to develop your business plan. It's an online platform, financial benchmarking data, industry research reports, and our SBDC Net provides some marketing research resources for our clients as well. So lots of good services for you. Again, our services are no fee. So hopefully you'll check us out if you are a small business owner. Just some upcoming webinars this afternoon here, just very briefly. We have our Restaurant Resilience Series continuing. It's a monthly program. So if you're a restaurant business and you can join us today, we're going to be talking about digital marketing for the food service industry. We have our SBIR overview, how to leverage America's seed fund, coming up tomorrow. Buying a business, a new topic for us that we've added to our program calendar next week. Angel investing, about pandemic disruption, creating new opportunities. Every month we have 1 or 2 sessions specifically on digital marketing. And this month we're going to be talking about video and geoimaging, and that's April 28th. And then finally, we have our second round of the Great Marketing Turnaround Program. And we start with session 1, just kind of looking at target market update and positioning pivots, especially during this time of COVID. So hopefully, again, go to our Maricopa-SBDC website, and you'll be able to sign up for the programs there, just like you did for our program today. So once again, Lisa, thank you so much for your time today and bringing us up to date on all the things happening with our taxes for this year and those coming up next year.
Thank you for having me. I appreciate it.
And if you would please, your input is very valuable to us. So as we close this session out today, you'll be presented with an evaluation form. Please make sure you fill that out for us. And be sure to follow us on our social media. We'll be posting on upcoming events and just some general information. Oftentimes we'll post information that Lisa provides us from the IRS. So it's a way to kind of stay in touch with what's happening as far as small businesses and what you need to know. So thank you again all for joining us today, and we hope to see you at a future webinar.